What's happening, traders? It's your homeboy back again with another video, and in this video we're going to be discussing the birth and the origin of a move which leads to the event break and the difference between the two. All right, because I understand that a few of you guys, well, most of you guys, I understand like 50 to 60% of you are actually newbies watching this channel. So for you guys, this is going to be a very important video. For the community who already understands the event chain, this is just going to be a refresher just so you don't forget this shit and you always remember. So let's dive in. So for me personally, the event one is always a daily level of supply and demand. Depending if you guys are trading intraday, that may be a H1, that may be a H4. If you're dealing with lower time frames, maybe you're looking at the 30-minute or the 15-minute as your event one. But for me, my event one is the daily supply or demand level. So we've got a daily supply level right here. So now what I usually do is, for you, potentially you could drop down to the H4. But for me, I like to drop down to the H1 and find our event break area. So let's dive in. So number one, guys, remember, we do not have to guess where the event break area is. Okay, we don't have to guess. The market will show us. Sometimes there's friction, sometimes there isn't, but if you have a discerning eye, it is pretty clear. So let's move forward. Okay, and there we have our first one. All right, so if we're looking to short from an area of supply, then our event break area will usually be a bullish engulfing or bullish engulfing structure area of demand. Okay, if we're looking too long from an area of demand, then our bearish engulfing structure is going to be our event break area. Okay, so let's continue. And bam, we have a break of event 2. All right, now I actually had to go through so many charts just to find an origin of a move. So I kept on finding births of the moves. I kept on getting hit and working, and finding an origin break was actually pretty hard, right? So let's start from the beginning, right? Where did this move begin from? Where did it start? Okay, so it started here. The birth of the move started here as it entered our event one, our daily level of supply, right? Now, if the market moved through here, moved down. Now, if this produced this level here and then pushed back up, this would then become invalid, right? And more than likely that if the market pushed up, it would create new areas for an event 2, because then it would be closer to price and be looking for an event break area closer up here, and probably price would have been creating another supply zone to break. But right now, this is our event 2 area, which is represented by a bullish engulfing structure. Okay, so the market came, it produced the bullish engulfing structure, moved out, moved back into it again, moved back out, and now we've got a break. All right, now this bearish engulfing structure is what most people would normally think led to the break, right? Because the market's moved out, come back in, and then broken our event 2 area, right? But this is the origin of the move. This is the origin of the break, right? The birth of the move began over here. So if you decided to use the origin of the break as your trigger event, more than likely it would not be as successful as using the birth of the move that led to the actual break. All right, so let's continue and see how this plays out. And as we can see, moved into the birth, broke the origin, moved into the birth, and then broke down nicely. Now, sometimes, guys, if the market has some real momentum, it won't make it to the birth. Sometimes it may just hit the origin and break, right, and just move down. And you think, oh shit, I missed out. So here's something that you can also do. If the birth and the origin of the move are quite close together in terms of the structure, you can encapsulate both within your zone and then short from the birth of here, short from the proximal line of here all the way to the high of here, right? That would be your shorting area. If you thought that the market had enough momentum that it may not even make it to the birth of the zone, just to the origin of the zone, you may want to encapsulate the two. All right, you may have to decrease your position size depending on how big that zone is, but that's just an idea if those two zones are really close together. But ideally, you always want to go for the birth of the move and not the origin of the move, because why? Well, to be honest with you, the community and I have actually discovered that the birth of the move is always more powerful than the origin of the move, and generally just through failure, you know, the birth of the move always works out more, at least 80% of the time, than the origin. All right. So please just pay attention to that. And remember, if you're looking to go short from areas of supply, you're looking for a bearish engulfing structure as your trigger, right? And you're looking for a bullish engulfing structure as your event break. All right. So I hope that makes things a little bit clearer for you. Now, I want to give you another example, which is slightly messier on the USD Swiss franc. Franc. All right, so here we have a lovely area of daily supply which has been created. Let's dive in to the H1 chart. Remember, guys, we do not have to guess where our event 2 area is. The market will provide. All right. Okay, so we have our area initially here. Let's continue. Let's extend this a little bit more. Okay, so now we have our nice strong break. So now this is a little bit different. There isn't really an origin of a move over here. We've got the birth, which is very clear, right? Because this is where it began. It moved into the event break area, moved back out, and then broke. All right. So we will draw our trigger event right here. All right. We'll go short and get a nice break of it now. Market's got a nice little touch, and we're in, touch again. Oh, okay, so wasn't expecting that one, was ya? So look, so this has now broken our trigger event. So this trade is a loser, but it is not over. Okay, it's not over as yet, because there can still be potential for a move down. It's just that this trigger event was not it. Okay, so it doesn't mean you give up, right? It means that you continue to play the event chain. Now, this is something you have to pay attention to as well, guys, that if you keep on playing the event chain and it keeps on losing, what do you think's happened? You've picked the wrong event 1 zone, right? Now, usually you won't discover this until you've played it probably about 2, 3, 4 times, and it finally breaks out of the event 1 zone. Then you go out to the daily charts or your chart where you actually draw up your event 1s, and then you'll look at all the event 1s that have been broken in an uptrend, and you realize, okay, so I've just actually been taking profit taking zones and not zones where the institutions have actually been placing trades, right? So just, keep an eye on that shit, right? If you've picked the wrong event 1 zone, then no trigger event will work, right? Or it will work in the short term and then just got broken. All right. So now that this has been broken, we want to do the same thing again, right? We want to draw in levels that are holding up price, right? Bullish engulfing structure, right? So let's continue. Let's continue. Ah, lovely. So we've got another one that's lined itself up beautifully for us. All right, we've got the bullish engulfing structure. Price came into it and pushed straight back out. This is good. Let's get rid of that. Let's continue. All right, we've got a nice break. Perfect. So now we've got a break of the event 2 area that is closest to price. All right. So this area looks messy as hell, right? But it still conforms to our rally base drop. As we can see, we have a rally, a basing, and then a drop. But it's messy, and how you draw this in is entirely up to you. You can start your basing from here. All right. Let's just draw short. You can start your basing from here. Okay. Now, this is what I always like to do. If we've got a high like this, now, another thing, guys, if there's a high just before your basing and that high is really wicky, right? I would be very cautious, because usually price breaks above the trigger and sometimes goes up to the end of the wick and then comes back down, or because of that wick, price just won't stop here because price has been up here already. Okay, so price will just continue moving up. So if there's a long wick just before this basing area, I would be very, very cautious. But in this instance, we haven't got much of a long wick here. We've got a high just before it. So what I would do, just to be cautious, is move this just to that high up there, just to be safe, right? So now let's play the event chain, and we have entry, and then the market moves out nicely. Okay, so we can clearly see here that this trigger event got broken, but as we continued and the market played out, the market continued to create other event 2 areas, which gave us potential for a short trade. And we always take the event break area, which is closest to price, right? Because think about it like this. If we decided to take this event break area and then it's broken here, we'd be out the trade, right? The market would have moved, continued down without us, because we didn't take the event break area that is closest to price. So make sure you understand that. You always want to take the event break area closest to price.